About 5 or 6 months ago, the Railway Board issued an order that made public sector companies, including those under the national transporter, compete with the private sector in the open market for rail contracts. There was a show of intent of making large-scale ordering for the railway sector as well. And then we've seen some proof of evidence, maybe by virtue of one large order that I saw, and maybe some that I didn't see, that TexRail won about 3 days ago. The size of the order, which extended for a period of 39 months, was to the tune of 6,400 odd crore rupees, which is, as per my math, about 3x the annual revenues of the company which has won the contract itself. So we thought it best to get in the man at the helm of the company to talk about whether there are winds of change in the space. Is it too early to say, considering all that's happening around the world and inflationary aspects, or is there some definitive movement out there? Ashish Gupta, the MD of TexRail, joins us right now with his thoughts on how does he see the order win that they had, and of course, how does he see the winds of change, if any, in the sector. Keep in mind, viewers, that they are under the silent period, and therefore a lot of financial numbers will not be forthcoming in this interaction. Ashish, great having you. Thanks for joining in. Hope all is well.
All good, Neeraj. Thank you so much for having me, and love to share my thoughts on this forum. So in a manner of speaking, you're quite correct. We can feel the winds of change, and definitely also at the speed at which things are moving. Actually, see, in the month of I think Feb or March, the Honorable Railway Minister had called the entire industry, and where he shared his vision of procuring a very large quantity of wagons, and also there were discussions around locomotives, etc., etc. And his vision and the Prime Minister's vision on reducing the logistics cost in India, and therefore need to push growth in rail freight to approximately 40% levels in the next 7-10 years. So we have seen many such presentations in the past, and and immediately after that, the industry was called again for interaction, by the Railway Board, and all our views, the industry's views, were taken on board so that the tender is a success. And on 19th of April was the last day to file the quotations, and so from Feb to April 19th, basically when everybody quoted, and on 10th of May, when we got the order, the speed at which Indian Railways has moved, and especially the push given by Honorable Minister of Rail is commendable. And this is not a wind of change; this is a storm of change actually, because such a large order getting finalized in 20 days on competitive basis is amazing. The speed at which government has worked is fantastic. It shows real intent on part of the government to change things, and now it is up to the industry to take the challenge and start producing as per the requirement. And so this is what it is. The chronology of event itself tells you that how things are changing.
Yes, indeed. So would love to probe this a bit more, Ashish, if you will. So I'm starting off with this order and then moving on to other things. But 6,450 crores is large, right? I mean, compared to your annual revenues, forget market cap, but annual revenues is also very large. Can you tell us the nature of this order, whether it comes at cutthroat margins because the competition would have been large and it's a large one, so maybe you also bid aggressively for it? And if this is something that you believe we can see more of, considering the extent of ordering that the railways might be wanting to do, since you are a part of 2 of these presentations, you would have some sense of what's the magnitude of orders that are going to come in over the next 2 years.
Okay, so let me start with the first part of your question in terms of competition and margin. See, you have to look at the entire wagon industry in a very different perspective. See, the wagon industry had an installed capacity of, or an approved capacity of close to 20,000 wagons. And this is annual capacity, right? And most of the years, I think almost all the years, this capacity utilization never exceeded 50%. Last year it was, below 40%. So what had happened was that the industry had stopped investing, to upgrade infrastructure, people, to all sorts of things, because fixed costs, coverage would always become an issue. What this order has done actually is given the industry a visibility of 4 years to start investing in technology, in operations, in improving efficiencies, and therefore to reduce costs and improve margins. Right. So that is something which is very, very good for the industry. And I have a feel that these if you look at the national rail plan, the requirement of wagons is much, much higher, much, much higher. Currently, this order book, which is 90,000 wagons tender, which was there, consumes almost the entire capacity. But I can only tell you that the industry has enough, cushion to increase this capacity further without any major investments. And so, therefore, I think even if more orders come, and they will come, because we will need a huge number of wagons. So it is not sure whether it will come after 2 months, 6 months, 1 year. Because the first the dust on this order has to settle down. The real challenge on this order would be to set up the entire supply chains to double the industry production, in a short span of time. And therefore, if you see, the duration of the order is very typical, 39 months. The first 3 months is to actually, prepare and start ramping up. And then, actual delivery time would be actually 36 months only, because first 3 months you will take to, set up things and, ramp up the supply chain. And I think with the type of, industry which is there, and the good thing is all Calcutta focused industry. So the entire ecosystem would exist in Calcutta. So developing supply chain would take a lot of effort from the entire industry, because the vendor base has to be increased, and they also would need to ramp up their capacities. So overall, the industry should see a lot of impetus on ramping up, a lot of impetus on improving efficiencies. And I think with scale, people will improve their fixed cost coverage, so the margins will definitely improve.
Okay, may I ask you? Maybe I'm missing a point here, but you are making a reference to the industry at large. Was this a larger order which got split between one or two players, or did this entirely come to you?
No. This was a 90,000 wagon order. We just got 20,000 wagons out of it. So other companies will also get the remaining volume.
Okay, not declared as yet. You are the first one which has been declared, I presume.
So see, we got the order. We are a listed company, so we had to declare it to the stock exchange. So as and when more companies get, I think by today everybody would declare what they have got, because the acceptance has a 3-day lead time. So by today everybody would accept the orders, and so it's actually a 90,000 wagon order. We are not the only people who have backed the orders. We're the only people who have actually gone to the stock exchange to inform. That's all.
Got it. Ashish, can I ask you, so based on, and again, this may not necessarily turn out exactly the way you're saying, but I'm just trying to understand, based on your meetings and assessment of the conversation that happened during those meetings, and based on the regular workflow that happens in railways any which ways, would you reckon that there could be more orders, maybe not of this magnitude, but more orders that will come in the rest of FY23 for you and the industry as well?
It is very difficult for me to say this, because there have been a lot of speculation in the market around more orders coming in, and I can't comment on that, because I'm not privy to any such information, or privy to any such conversation which has happened with the industry so far.
Okay, so the reason I'm asking this is I'm trying to understand. It's a great order, I'm sure, but one swallow does not a summer make. How would you go out and take a call of investing in technology, upgradation, and investments if you have to? I don't think you need to invest in capacity, but otherwise, or do you? How do you take that call on the back of one order win that has happened? Is my question.
See, one is it is almost a 4-year order, number one. So,
Sure.
it will give you enough return on investment. So, we will plan the investment based upon the IRR or ROI as the case may be. And also, we have orders from the private sector also. There are the customers also whom we deal with. So even without this, I still have an order book of 1,800 wagons lying with me. So to that extent, I think the market is not limited to Indian Railways. That is one. There's a very large, private sector market which exists in the country today, which is expanding. See, you should understand that as the country progresses, we will see more and more containerization of freight, and most of the container rakes are owned by all the container rakes are owned by private sector. So there is going to be a large demand for container rakes. A lot of private companies are also buying their own rakes. So we have a lot of so there are a lot of inquiries and a lot of orders already in the market where private companies are also buying their own rakes. So it's a good market. It's not as big as Indian Railways, but yes, it is. In a good year, it could go up to 10% of the total market also.
Oh, interesting. Okay.
Plus,
And
we have
and
exports.
and I reckon you're not just a wagon company, right? The railway EPC and some of the other workflows also come in.
Yes, we do.
How have they shaped up?
See, railway EPC, we are our biggest project currently is the Western DFC project on the signaling part. So that is the signaling project we have. We are doing the track laying at on the in the Bangalore Metro project. We are doing some work in EDFC. We have some projects going on in Bangladesh, and so very interesting times for EPC business because a lot of new work is going to come up, especially in the metro segment in terms of construction of tracks and signaling, etc. So we would be actively looking at those projects now. In the EPC business, we had a very large portfolio of very small projects, which was consuming a lot of management bandwidth, because when we had acquired Kalindi, those projects came in as legacy, and so we are now in the process of streamlining the portfolio and trying to regroup the entire business. So we have great plans, for the EPC business as well. But right now it is consolidation time for the EPC business.
Got it. So Ashish, I know you can't talk specific numbers. I'm not going to ask you what you did in quarter four or etc. etc. But I'm just trying to understand that from a revenue size which grew over the last 5 years, yes, but which came at the cost of not at the cost of margin, but maybe due to input costs and COVID and all of that, your margins halved, your PAT numbers have dwindled quite significantly over the last 5 years, as your annual report says. Do you reckon that with this order win and with the winds of change, things could improve materially on the operational metrics? And how much? I mean, just trying to understand. Can you give us some color about where, not exact numbers, but where could, for example, margins move up to based on what margins you might be enjoying for the current order and some of the other consolidation of consolidated orders?
Okay, so if you look at our traditional order book, it has normally been 60% in the last 4 or 5 years, 60% private sector, 40% Indian Railways. And unfortunately, the private sector orders are not, with a price variance clause,
Okay.
fixed price contract. But the railway contracts come with a price variance clause. So to that extent, your exposure to commodity prices and inflation is quite high if you are, skewed towards the private sector side, rather than the Indian railway side. So now the things are going to change because most of our capacities would be for railways, and proportionately the risk in doing business will go down because it's like a natural hedge. Number two is, see, an industry which has a capacity of 30,000 wagons, if it is producing 11,000 wagons annually, so it's a different market dynamics altogether.
Agreed.
People have fixed costs
Agreed.
to take care of. So so to that extent, I can only say that industry should be profitable, but I don't think industry will profit here.
No, of course not. But I was just wondering, being profitable means what kind of upward movement from where you are right now? That's the limited point. Just some color, not exact numbers, just some color.
It should be better, that is for sure, because see, with such a large order book, your fixed cost coverage is going to significantly improve.
Okay.
So therefore, your contributions, on a per wagon basis would have a higher impact on PBT, compared to the earlier seen. So to that extent, there is a natural change which would happen, in the color of the numbers.
Right.
So that is the only thing I can comment right now. Plus,
Okay.
the economies of scale would also lend itself to better buying, better procurement, better yields in material usage, and stuff like that. So
and input costs don't hurt you as much in the government contract anyway. So the higher steel cost, higher other costs will not be as big a factor.
The good thing about this contract, this contract has, from a buying point of view, I think this order has happened at the peak of the commodity cycle.
That's true.
That's true. And therefore, to the buyer initially it may pinch, but the prices are likely to go down, and if they go down, the benefit will go to the buyer.
With the buyer, you will. So your margin stays. But okay. Here's my question. Can you give me some idea of your FY21 margins, annual margins? What I think about 3%, right? Operating margins or EBITDA margins, so about 3%. I'm guessing this is materially higher, but is this closer to double digits? Is it double digits? What's the kind of, if you can talk about it.
No, I can't talk about it.
You can't talk about it. Okay, fair. Let's leave it at that. No problem. I have one more question. And would you, as a company, because you mentioned one is the public sector, the other is the private sector. There's a lot of talk around how there might be global multinationals who might look to do JVs with large domestic Indian players who have years of reputation, etc. Your name obviously comes up, as do a couple of others. Would you be open to doing a JV with a global major, maybe some investments from somebody who's willing to put in the money because the sector might be seeing winds of change?
See, we already have a lot of JVs. We are already working with Webtech. So we already have JVs in the space, and see, we are always open to look at opportunities for joint ventures or collaborations. We already do a lot of bidding for projects in consortiums. Those are not technically JVs, but consortium bidding does happen with various companies. But in terms of manufacturing, nothing has come up so far. If something is there, we'll examine it, on a case-to-case basis. But,
okay, let me rephrase my question then. Is there a possibility of large consortium bids being made by you and other companies in the foreseeable future?
See, for EPC contracts, it's a standard practice to do consortium bids, but not in wagon tenders. Wagon tenders are on standalone basis. So, I don't know, because even globally, I have not seen railway wagon tenders, being bid. Because this is a pure supply. Unless you have an order to build a railway track and also supply wagons.
No, okay, sorry. My final question, Ashish, was because you understand this space a lot better. But here's what I was thinking. The conversation was that a lot of companies are winning those train contracts, and then instead of being dependent and being subject to not being able to supply on time, etc., they might just do a tie-up of some sorts with an existing player which is into wagon manufacturing, so that all of the stuff happens on a timely basis and at the right quality. Do you reckon companies which have won these large train contracts and might win more might be wanting to do this? Are you in conversation with any such company?
No. See, this cannot happen in India because there's a very strict norm on each site and how much each site can produce. And when an order is given to a particular company, so it's all very well defined as to where it will be produced and who will produce it. You can't offload.
I get your point. Okay, great. Thank you for clearing that air. But more importantly, I'm just happy that a sector which has been there for around is finally starting to see some winds of change.
I just want to mention that what the Honorable MR had also told that day, that he wants the Indian wagon industry to produce for the world. And actually, if this happens, then nothing like it, because there's a huge market globally which is going to emerge because of the focus on ESG and cutting down on carbon emissions. Because from road to rail is a natural transition to happen. So I think it's a great challenge which Indian government has given to the industry. It's up to us now.
How do you do it though? Can I ask you? I mean, because you've been around, so if it were to happen, it would have happened, right? Why is it that somebody would suddenly take interest in Indian manufacturers?
See, the point is, you are operating a dead industry. It's operating at 30-40% capacity. People are not investing and just hanging around. And now suddenly, you have a possibility of, creating economies of scale, developing a fantastic supply chain system,
Okay.
basically unshackling. All the chains are being broken now. So
Would you go
it's,
out and talk to global players for
we are
manufacturing for them?
we are already exporting to Africa. We have done exports to Bangladesh earlier. So Africa is of great interest to us. So we are already there. It is a small presence, just entry strategy. But Africa is going to be a great market. GCC, then Europe. So
And where is the competition from, Ashish? Sorry, I'm just extending this a little bit, but it's an interesting point that you raised. So where is the competition from currently?
see, Indian companies would continue. Major competition would come from China.
Okay. So is
So,
there a
so
China plus one factor playing out here as well?
yes, China plus one factor is going to be a significant factor as we go out into the markets.
You've seen signs of that already?
Green shoots.
Green shoots. Okay. Well, wish you all the best. Thank you for the candor, and I really wish you all the best for the quarters and the years ahead.
Thank you so much.
Now, much appreciate you taking the time, viewers. Thanks for tuning in.
Thank you.